be honest, as Indians, we can never have enough shiny, glittery gold. Our grandmothers have been hoarding the metal for decades, and it's now our turn. Buying gold had become very expensive over the last 6 months, with prices soaring over 18,000 thanks to financial instability across the world. But the market has given investors an opportunity to come back.
Anything below 18,000 is a good buying opportunity for retail investors, but you will have an opportunity to go till 17,500. So you can spread your purchases from present level to maybe 300-400 rupees lower.
Now there are two reasons to buying gold. You either want to invest in the metal and book a profit, or you want to buy jewelry. So let's first talk about investing. Market watchers who nudge investors to buy gold now tell us you might stand to make a pre-tax profit of about 25% in the medium term.
If I were to see a confluence of events, I would say the current ruling prices which you have seen between 16,500 to 19,000 in the last 6 months, prices can easily be up 50-60% from here, which means if you realistically look at a 20-25-30% return on money, then that is definitely within the areas of possibility. If a 3-year time frame, then you can definitely look at a 20-25% gain as a retail investor, before taxes of course.
So now is a good time to buy, especially if you don't have an allocation of 10-15% of gold in your portfolio.
On an average, a person should have around 15% of their total portfolio in gold. If there is a chance of there being a crisis or some devaluation in the currency, then this should be increased to around 25.
So start today. And while it might seem tempting to buy large quantities of gold, you should stagger your investment over 6 months to a year and invest systematically to protect yourself from price fluctuations.
You can buy a lot at that time because all of us like to take some extra risk for that risk portfolio, but a normal investment portfolio, SIP will be the best, though you will never get the best buy, but you will not also get the worst buy. So SIP is the best format.
Now you could buy physical gold, coins or bars, but the safety of your purchase would be an issue and hiring a bank locker is becoming more difficult and expensive. If you're buying gold as an investment, we recommend you buy a demat gold asset through a gold ETF from a mutual fund company. An ETF will allow you to trade gold on the stock exchanges without having to physically buy the metal. The money you invest is used to buy gold at the London bullion market, and the dip and rise in global gold prices is reflected in the value of your holding.
The best thing about an ETF is that it's clean. You know, it's a security. It comes into your demat account. You can use it just like physical gold. You go to the broker, buy it. It comes into your demat account. 15 years down the line, if you believe, this is the time for me, I require the gold, you just sell it in the market, take the money and use it for a marriage or an education that may be. So it's safe, it's clean, it's cheaper, taxation is better. So, if you look at all aspects of it, I mean, it's a much better product than, say, just investing in physical gold.
There is a tax advantage as well. You don't have to pay wealth tax on an ETF, which you will have to pay on physical gold. Besides which, if you sell your physical gold in 3 years, you will have to pay short-term capital gains tax on it. But a gold ETF is treated like a mutual fund, and you're allowed to make a tax-free sale after just 1 year of purchase. There are several Indian fund houses which have gold ETFs in the market. And since the underlying price of gold is the same across all funds, pick the fund with the lowest expense ratio. It increases its returns. UTI's gold ETF has given the highest return over the last year. And if you want to buy gold jewelry just to stock up for the oncoming festive and wedding season, now might also be a good time to go shopping.
They should look at wedding season buying now over the next 2 months, because I see from a wholesale and from a trade point of view that a lot of wholesalers and a lot of gold jewelry people will be stocking up right now for their gold, hoping to make a profit during Diwali demand, whereby local prices will be perkier during Dhanteras.
So remember, if you plan to invest in gold, don't invest any more than 10% of your portfolio. Just like an SIP, make sure your gold investments are systematic. Buy small amounts of gold on a regular basis. As a retail investor, don't let the daily price fluctuation make you nervous. Hold your gold investments for at least 3 years before you decide to sell.